Investors today are looking for more than accounting profits. They want to know if banks are truly creating long-term value. In our study of publicly listed commercial banks in the Philippines, we compared traditional accounting measures like ROA, ROE, and DPS with value-based metrics such as economic value added and market value added. Our findings show what really drives investor confidence and how banks can use this insight to strengthen shareholder value. Traditional ratios show past performance but don't always capture whether a bank is creating wealth for shareholder. EVA measures whether a bank's profits exceed the cost of capital. MVA reflects investor perception, how the market values the bank compared to the capital invested. Together, these metrics give investors a clear view of long-term value creation. Philippine banks are financially stable and vital to the economy, but shareholder value has remained relatively low. Credit risk and uncertain market expectation reduce investor confidence. Even if banks operate normally, share prices may stagnate or fall. The challenge is not just profit, it's convincing investors that value is being sustainably created. Our study found that EVA and MBA significantly impact shareholder value. In contrast, traditional measures like ROA, ROE, and DPS were not significant predictors. These tell us that investors respond more to real value creation and confidence than to accounting profit alone. Policy recommendation. We recommend that publicly listed commercial banks reassess their capital structure and financing strategies. By managing the cost of capital effectively, banks can enhance EVA and ensure that profits translate into real shareholders' wealth. Banks should focus on improving operational efficiency and the quality of earnings. Stronger economic profits will then translate into actual value for shareholders, not just accounting gains. Strategies that strengthen MVA are crucial. By enhancing investors' confidence and market valuation, banks can directly increase shareholder value. Investors should pay attention to MVA and EVA rather than traditional measures like ROA, ROE, and DPS, which our study found are not significant determinants of shareholder value. Policymakers should strengthen financial transparency in publicly listed commercial banks to ensure accountability and boost confidence in value-based reporting. Banks should adopt broader value-based performance metrics in their internal evaluation systems. This aligns management decisions with shareholder interests and long-term value creation. Continuous monitoring of shareholder returns, cost of equity, and market valuation helps maintain financial stability and minimize volatility in shareholder value. Finally, future research should explore other factors that affect shareholder value, like corporate governance, firm characteristics, and macroeconomic trends, to improve understanding and guide better policies. Our study shows that shareholder value in Philippine banks depend not just on earning but on how banks create real economic value and maintain investor confidence. By embracing value-based performance management, publicly listed commercial banks can strengthen investor trust, improve market valuation, and support long-term growth. This video is based on our thesis on the impact of economic value added, market value added, and traditional accounting measures on shareholders' value of publicly listed commercial banks.